Welcome to this edition of the blockchain conference at the Graph Summit. We have some expert speakers here. Thank you, audience, for being in here and following us from the last session. Uh, as you all know, blockchain is playing a very important role in every business. And in many ways, it's like a revival. It's like the 2.0 of blockchain. We all know how 5 years ago, we all believed how blockchain was a force that was coming in. Several industry consortiums across banking, other forms of financial services, retail, and so on. Somewhere back there, it took a back seat, but we are very excited to see it come back. It's been a year since our own businesses at Capgemini and all the things we do in DeFi and blockchain got activated, and boy, are we having busy days and nights. With us today to discuss this revolution and movement and what they see from their vantage point, we have three eminent speakers today. First is Bart Kant, in no particular order. Bart has got a lot of experience working with the likes of IBM in smart contracts, Accenture, and now is the founder CEO of a consultancy, Rethink Ledgers. We also have Luke, who's founder of Tokeny, a tokenization and digital asset creator. And Luke and I met 6-7 years ago when nobody was discussing this. And I would listen to Luke and say, man, is this guy smoking something or what? Little did I realize in 5-6 years, the industry would transform itself, and we'll be working with Luke and his team so actively. We also have Andre Yankyuk. Andre is a gamer, influencer, eSports personality, and also the CEO of a growing company, Tempo Storm. So we have a very different perspective from each of them, very different industries. So let's get into action straight of all. So Bart, let me start with you. If you can please introduce Rethink Ledgers and start with, from your vantage point, what are your thoughts on the future of blockchain and how do you see it play in the next few years? I know you meet with a lot of clients from various types of industries. Over to you, Bart.
Absolutely. Well, thanks, Sankar, for the intro. So, first of all, Rethink Ledgers is a niche consulting firm. So, we play in the field of smart contract programming, and we do that for our clients in the financial services sector and also in healthcare. You might notice in the name we're saying Rethink Ledgers, not Rethink Blockchain. Because we really think in very much a wider context. We talk a lot of time talk to clients about ledger technology, which could be a blockchain, which could be a distributed ledger, or which also could be a centralized ledger. Think about your traditional databases. And so in those discussions over the last few years, we're seeing really an uptick right now, kind of in the interest level for production systems. If I think back my years at IBM and leading the blockchain practice over there, a lot of these kind of initiatives were around testing the technology, finding use cases, building consortiums. And a lot of these initiatives kind of got stalled into the proof of concept stage. Today, if we're talking about ledger technology or blockchain technology, with clients, it's really about bringing solutions to productions, and we're proud to say that in the last few clients that we're working with, kind of that's been all really the success factor, bringing solutions into a production environment, into a regulated environment like healthcare, into a regulated environment like financial services. And so a lot of effort has gone into kind of making the technology strong and robust to kind of fit all of the requirements of those environments. So that's kind of the more of the business process side of blockchain technology. And then of course you have the other side of the blockchain technology, which is the permissionless, the Bitcoins, the cryptos, the Ethereums of the world. And our experience has been over the last few years that it's a little bit of an ebb and flow, right? It's crypto summer or it's crypto winter. And a lot of things are going on that pushing the industry in those different directions. 2021 has been an excellent year in the crypto space, specifically around DeFi and NFTs, and we'll probably get into that a little bit more later. Recently, as of a couple of days or weeks ago, it seems like we're back in the crypto winter, where the cryptocurrencies have fallen steeply, and some of it has been driven by some questions around, is some of these crypto technologies like stable coins and algorithmic stable coins, are they really robust enough to survive in this environment? So that's kind of where I see kind of things evolution, and love to hear more about from the other panelists what
Yeah.
their thoughts are.
Luke, you have been a visionary. I mean, kind of imagining this, and obviously, like most of the visionaries, there was a lull period, and then you pivoted, and you're fast tracking a lot of initiatives. And again, to Bart's point, I mean, who thought that a 95% erosion in value and more would happen with Terra and Luna, which we all were hoping to be one of the best things to happen. So Luke, why don't you tell us your story on how you, in 3 minutes, how you got started, and obviously the creation of digital assets and tokenization. What are the things you see happening in the next 2 years?
We have high ambitions, of course, for the upcoming years. We think the real assets are finally coming on chain. So we started tokening in 2017, when it was the first crypto boom. So I think before 2017, crypto was still a world with believers, but it was not sure if it will really be for the long term. In 2017, you had all of this crowd coming and starting to play with this technology. So we were sure that massive investments will come to develop this technology, and we wanted to be part of it. So that's why we started Tokeny. And what we do is basically providing a compliance infrastructure for digital assets. So we help financial institutions mostly to represent their assets on the blockchain. So we use mostly public blockchains, but we bring compliance and control on these networks, because we think it can be, blockchain networks can be a suitable infrastructure for financial assets. But we have some hard time to believe that you can automate the governance, that you can plan the future and code everything. So what we do is to give the power to issuers and their authorized agents to perform actions, to enforce compliance, to enforce governance, to give them the tool to control their tokens during the full life cycle of the tokens. So basically, we help them to do centralized issuances on a decentralized network. So it's suitable for securities, obviously, but also for stablecoins. We have more and more clients issuing stablecoins, but stablecoins where you know who is the issuer and you can propose some guarantee, legal guarantee and concrete guarantees to their users, to token holders. So that's the type of project we do, but also loyalty programs, reward programs, that kind of thing. So we provide the technology to these players.
Thanks, Luke. And Andre, you had the benefit of seeing things from a very different perspective, and as a very successful global winner of the Hearthstone and being a celebrity and a pioneer in eSports. If you can share what your company does, Andre, and how do you think blockchain applies to eSports and gaming? Obviously, we don't run into that often, so very excited to hear from you on what you see out there.
Yeah, definitely. Yeah, so we're a media company. Our background's always been in esports and competitive gaming, and that's where I got my start as a streamer and professional player. But over the years, we built out our production arm and started making a lot of content, a lot of interactive content. Really familiar with Twitch and YouTube and kind of this new era of influencer-driven content. And because we had the distribution, we basically decided one day we really want to own the product, and we started making our own video game about 4 years ago. We're a smaller mid-sized studio, about 50 people. The game's finally launching later this year, and I'm really excited about what blockchain can do to monetize games in a way that's way better for players than anything that was possible before. So,
yeah. And on that subject, Andre, like we see, obviously the metaverse is now here and real. We see all those purchases happening in Decentraland and so on, but also from a media company perspective, we see a lot of action, and Fortnite, for example, with friends at Epic are already embracing the metaverse, trying to create something. So what do you think the metaverse holds for esports and media?
Well, it depends on how you define metaverse, which everyone kind of does differently. I like to think of it as kind of the next evolution of the internet, where everything is more interoperable. And some of the biggest differences when it comes to gaming with what you can do in that kind of world compared to what we could do before is you basically create digital ownership. You we were creating like digital assets in databases since the dawn of time. And there's been and are huge gray markets for video game items long before blockchain. It's just that when you have this like medium of transfer, suddenly all of these assets can have saleability that they didn't have before. And it's just it opens the door to commoditizing different things than was possible before. Like what I'm really excited about with our game is we get to commoditize status rather than content. That means we're giving more content to players for free, better value proposition, just lets us outcompete other games. So that's not possible without having a medium for digital ownership, because then you're just putting things in a database and maybe you can sell it on some gray market for 20% of what it's worth, but it's not, your digital asset doesn't have value unless you can really sell it. And that's the main thing blockchain, at least in the short term, lets you do with gaming. Yeah.
Very interesting. And Luke, I know that to Andre's point, obviously there is a lot of legitimacy around what we see as a digital assets, and you are helping financial industry get more compliant, get more savvy. And if you can take some time and explain what are the kind of things you're doing in the compliance space to make it more efficient.
Yeah, I think Andre is totally right. I mean, what we tried to do when we launched Tokeny 4 years ago was to guarantee digital ownership. And I think it's a challenge for the next decade. Is how can we guarantee that digitally you own something and that your digital proof is actually a real proof of property. So very quickly, we understood that a wallet cannot guarantee any kind of ownership. If someone steals your key or has access to your key, who is the owner? The thief is the owner because he has the key, it doesn't work. And unfortunately, identity, the concept of identity online is not as simple as a password. Otherwise, it will make a lot of things simpler. So we understood that we had to identify every stakeholders on chain, and not only stakeholders, but also programs and items. And so we came up with this framework to create on-chain identities. So we came up with on-chain ID, a self-sovereign identity system that you can help to identify anything. So mostly our clients use it to identify themselves as an issuer, but also their agents and also and mostly their investors. So of course, on the blockchain, you don't have personal information and so on, but you can prove on-chain that you own one or several wallets with the assets inside. So by doing this, we can whitelist on-chain identities and permission tokens. We can also permission DeFi protocols or DAOs or whatever that is on-chain with this aggregator of KYC solutions, of identity proofs. And all of our clients are using this solution. So when they onboard investors, automatically these investors get an on-chain ID. They can reuse this on-chain ID. And directly on their on-chain ID, they have one or several wallets and one or several proofs to make them eligible for this token or for this DeFi protocol and so on. So at any moment, we know exactly who owns what, and it creates a legal link, legal relationship between the issuer and the owner of the asset.
Yeah, and that's very interesting to identify presence and what people are doing. So Andre, applying this to media and esports, obviously, most of the creative work we do is mostly, I suspect, on YouTube and Twitch and so on. So how will these things coexist on the blockchain, and how will your fans and followers keep up? How does that work?
Well, blockchain lets you monetize really anything in different ways than you could before. There's already been a lot of blockchain adoption from influencers on YouTube and Twitch, where they'll basically create their own community token and then reward their viewers with that for free, just for watching. And then maybe they sell some merchandise or something the viewers can buy using tokens. But they create their own micro economies around their channel and their content, and that's a pretty cool capacity just to have as a business. It lets you reach levels of scale that you kind of can't with a unit sales model sometimes. Like in the case of gaming, what I'm really excited about is moving away from the traditional unit sales model, which is more like a light bulb company. Like to make more money, you have to sell more stuff, more game content, more expansions, sell more discs. When you can have a medium for digital ownership, and when you tokenize your in-game currency, you can instead monetize like an exchange instead of a store. And it's just it's a type of business model that aligns the incentives of the company making the game and the player way better. Because now if I'm a player, instead of just, you know, spending $10 and throwing it in the furnace over and over to unlock stuff in the game, well, now I'm getting these, you know, assets that I could resell that maybe they appreciate in value over time. Maybe it was really hard to earn them and I had to be a really good player to get it. And that has value in and of itself. Maybe I won this tournament and there's only one of this in existence that only the winner of that tournament got. And suddenly, you know, as the developer, you have this superpower and this broad spectrum of uses as a game studio. Like when you're trying to get users for your game, you're doing user acquisition campaigns, you give them these cosmetics for free and they have cash values. People care about them a lot more than if you just gave them a promo code for a free games cosmetic. You can do prizing for esports in a way that is sustainable. You can do quantity limited rewards. You run a tournament and the top 8 players get this cosmetic that you made for them. It doesn't cost the company that much to make one asset. There's only 8 of them in existence. And suddenly, you know, each of them could have, I mean, frankly, a pretty high value. And the players that are playing this game for a living can make money and make a living playing a game by being good at it. And this is something that's been just fundamentally really hard about esports up until now. You know, it really is an influencer driven business. And this is a way for players that are good at the game, but maybe they don't want to be YouTubers to actually make a living being good at what they do.
Fantastic. Oh, that's very interesting to hear. Very different use case. Bart, you have always been a big fan of improving the healthcare industry using new technologies. And it's very sad to see whichever shape of government you want or party you follow, there's always those things that come in the way of reducing the cost of healthcare. And how do you think something like the blockchain can help us as a country make the healthcare affordable and cost to go down?
Yeah, well, it certainly is going up. That's been the history here and projected history in the future. And so we started working with a startup in healthcare, specifically trying to tackle one aspect of healthcare. So if you break healthcare or, you know, hospital healthcare into 4 buckets, you have, you know, the facilities, you have the surgeons, you have the anesthesiologist, and then you have, you know, any of the devices that are being used in a surgery. And so this healthcare company is focusing on how can they improve the processes and the cost of hospitals doing surgeries with those medical device implants. This is a large industry, about $200 billion on an annual basis. And what they're trying to do using ledger tech and smart contract is really improve the process of the interaction between the hospital and the medical device companies. This, you know, from experience, and the founders of this company worked in the medical device world for many years. It's been, you know, really going back to the 80s as far as it concerns the processes. You know, people are writing down information about which medical device goes into kind of a certain patient. They pass it on to the procurement team, who creates manual POs and eventually even does manual checks to write payment to the medical device companies. And so what we accomplished in a very short period using a smart contract technology is really to digitize this entire end-to-end process, from, you know, a person going into the operating room, a box getting opened because they need a new hip, a knee, cement, a new pin, to all the way that product being reordered automatically through a purchase order. The medical device companies have direct insight of what's being used, and then the entire inventory management. So we're looking at using the technology to really bring significant improvements in that workflow and that interactive workflow between 2 different parties. And that's where kind of smart contracts and blockchain comes into play, because we really can define of what part of the data is really owned by which party into the workflow, what is being shared, how it can be manipulated, what interaction can be done on top of that, and give real-time view into the process from all participants in the end-to-end workflow. So really kind of driving efficiency in data, efficiency in speed through that entire workflow process.
Interesting. And Luke, you have started working on both sides of the Atlantic. What are some of the interesting use cases you see out there, and how can asset and wealth management industry, for example, or others become more efficient? I mean, a lot of them are believers in the blockchain, they are believers in digital assets, but for those that are wondering, how the hell do I get this done? What are the processes involved, and how do you see it?
I think it evolved a lot over time. 3-4 years ago, we had many projects who wanted to get access to funding via blockchain. We were telling them it's not because you go on chain or because you open a website that suddenly everybody is rushing to invest in your securities. Now, more and more, we tokenize existing assets with an existing cap table of shareholders. So it's what we see more and more. So we tokenized last year for a bit more than $28 billion of assets. Wow. Private securities, mostly a lot of commodities in volume, or gold, palladium, a bit of everything. But where we see the most traction is actually in real estate, because I think real estate is illiquid by nature. It's also tangible. So I think it's in a new industry. When you digitalize everything, it's it reassures people. And it's not too hard to define the value of the underlying asset, which is very important if you want more transferability, more liquidity. So definitely real estate is where we see the most traction. It can be with closed-end funds, it can be with debt instrument, equities. It doesn't matter that much because our framework is actually asset agnostic and also jurisdiction agnostic. So because we reached that point where we can theoretically tokenize anything, the possibilities are infinite. And that's why we are in a mission to tokenize for $1 trillion of assets in the next 3 years. It's really our goal. And now it can go fast because we have the technological tools. So now it's just about making sure that we work with the right asset managers, right fund servicers, right exchanges to bring these assets. And the more we'll have qualitative assets on chain, the more investors will start using them and see the benefits of direct ownership and everything you can do when you actually control your assets, and when you don't have these 6 or 7 layers between the issuer and the actual shareholder.
Interesting. And once you tokenize those assets, Luke, you don't get involved in floating it on a marketplace or anything. That's left to the customer to decide what they want to do, and that's a different set of economics, correct?
Yeah, I think that's why for the moment it's still the early days. It's because you don't have secondary market for these assets yet. We actually a few months ago we released a bulletin board system for the European market. So you can trade in peer-to-peer. You can find someone to trade with, and then you can leverage blockchain to make atomic swap, DVD transfers, delivery versus delivery without any counterparty risk. But it's very new because the regulations are not made yet to handle digital securities. They are made to have someone in between to make sure everything goes fine. So we are changing that step by step by proving that blockchain is a suitable infrastructure, but it will take time. We need good assets to make sure people start using it, understand it, and step by step the regulator will adapt.
Andre, we are fortunate to hang out with a lot of digital natives and very young people coming into media and so on. What are their expectations? Do you feel that as industry, financial services has let them down, or with people like Robinhood, actually we are trying to do a better job? And Robinhood may or may not be a good example depending on which side of the transaction they were on. But how do these people see things like crypto, Bitcoin, and do they feel that the traditional banks are ready for them, or are they more likely to go DeFi? What are your thoughts there?
Well, I think it's pretty binary. There's the folks that haven't gone down the rabbit hole at all of what is money, and then there's the folks that have. And the young folks that have, the conversation it's less about services. It's more about the effects of quantitative easing, which they feel all around them, and these are like the main concerns. And blockchain, Bitcoin, what for all of its uncertainty, seems to be potentially a light in the end of the tunnel. At the very least, it's like a potential solution for a problem that affects all of us and all of society. So I think, yeah, the conversations being had now are, I mean, yeah, it's less about like, what can this do better for me than like Venmo or Cash App or some centralized app that already makes, ease of payment fairly digital. I mean, the dollar's already digital, right? Like that's not the leap that's interesting. I think people are just really hungry for a reliable store of value that like accurately reflects the values of society. And yeah, there's questions starting to be asked, like, can you have war without fiat currency and things, like it's very interesting. I don't know. So these are kinds of the conversations that maybe it's just a product of what I've been more interested in, but those tends to be kind of what people are talking about. They want to buy a home, they want security, and unchecked asset inflation makes that really hard for them. So
yeah. That's interesting. Bart, Luke touched upon asset and wealth management industry, and Andre touched upon storing value or transactions and mortgages and so on. What do you see as some of the applications that are underway and the future from a capital markets perspective for blockchain?
Yeah, so I certainly see a lot of traction in the field that Luke is doing, the tokenization and securitization. So those are industries that are really managed by big financial institutions, and with newer technology, I think allows to have some new entrants come into the market and do things more efficiently. Creating a mortgage-backed security is still very complex at this day and age, and so but there's many other tokens that can or assets that can be securitized. We're working with a client who's trying to securitize healthcare claims for the government, and so you see really an appetite to kind of build these products in an efficient way. And then also dealing with the settlement aspect of it. That's where blockchain comes into play. You get that kind of traceability from when it was originated, with the data associated to eventually the settlement of those transactions. So that's kind of one big area. Plus some of the post-trade clearing and settlement aspects of those assets. The other kind of big initiative we see is around identity services and some of the concepts that come forward from self-sovereign identity. So we see in the capital market space initiatives come forward around creating an investor passport. If you're an investor, accredited investor, and need to go through doing some trades with a variety of parties, you get burdened with a lot of KYC, AML requirements and compliance. And so trying to kind of build a passport with a lot of that information assigned to you as the owner, that you can take to multiple investment managers is another big initiative that we see and participate in building for the capital markets industry.
Andre, do you see the creator economy embracing a lot more of NFTs? Obviously, you are in media, you've interacted with music personalities and other creator economy folks. Do they seriously believe that this is a way in which they would like to get paid and it kind of monetizes their creativity versus joining Tidal or something? Well, what are your thoughts there?
Yeah, they do, because it's more profitable for them. Like, for example, if you write a book and you want to sell it on Amazon, you sell it for $10, you get about $1 of that. And this is the nature of middlemen. They remove value for the system for providing that service, right? So the cool thing about being able to sell an NFT as a creator directly is you're getting 100% of that revenue. Nobody else is getting a cut, and that's kind of the benefit. Now you have to have a consumer base that's receptive to that and open to this technology, and can work through all of the user experience hurdles that still exist because it's such a young technology. But these things will and are getting worked out with time, and yeah, I think that trend will just continue of people kind of adopting this as a way to transfer digital assets between each other more efficiently without somebody else taking a cut.
That was a fascinating discussion between the three of you. Thank you guys for making it today. And our audience, you saw how blockchain is here and now. You saw the applications it has across a variety of industries. You saw how eSports, NFTs, the creator economy all come together, and how infra rails like blockchain and the metaverse can service all these new ways of life, I would say, because I think the distinction between various industries are also not as strong as it's going to be. It's all going to be one big lifestyle economy with folks like we have on the panel playing an important role. Before we call it a wrap, let me give floor to each of our panelists for some last minute thoughts, or if I haven't asked any question and something they want to say. Luke?
First, thank you for having me today. I think we are, all of us here, we are in a mission to make this industry grow and do things more seriously, more professionally, step by step. We like innovation, but very often it goes a bit too fast and without control. And I'm a huge Defi user, so I'm the first one to try new services. But what we try to do with Tokeny is to create a safety net around all of this, to make sure that when you participate in a DeFi protocol, for example, you can be sure that there is no underage kid on the other side of the smart contract, or some terrorist, or just here to scam people, or to launder money, that kind of thing. So we need some safeguards. We don't need to expose all of our data everywhere on chain, but we need ways to be able to prove that we are legit when we do something on chain. Same way we need to prove that we're legit when we do something on the internet. On the internet, it was about information. On blockchain, it's about value and money. So we have to be much more careful. So that's what we try to do with Tokeny, but we think it's a global effort. It's a global ecosystem that we have to bring in this direction. And of course, nobody wants to do KYC all day long. So we need to find solutions to make it smart and to make Web3 better than what Web2 was, with Google and Facebook and Amazon running everything. Web3 can empower the users, but I'm not sure that we are going in that direction in the last 12 months. So hopefully we'll be better, all of us together.
Bart?
Yeah, I concur with Luke, right? So kind of the big potential of the Web3 space, kind of taking ownership of data through identity, or as participants in the business process. So I think that's, we've come a long way. The technology has matured a lot on the back end, but I think we still need some really smart people and some good designers to make it a enjoyable customer experience. And so I think we still have some work to do there. But because people are going to adopt technology if it becomes easy, if it becomes like an Apple-like experience. And so a lot of work is ahead of us to make that happen in the ledger and blockchain world.
Last but not the least, Andre, what are your parting thoughts for our audience?
Yeah, just a lot of cool possibilities being opened up with this tech. I'm excited because I think that applied correctly, it can make games better, and I love gaming. So yeah, I'm just excited to put this product out into the world and just see if we can validate that thesis. But yeah, I mean, that aside, I think the philosophy behind what a lot of folks are trying to do by providing more value to the individual and empowering the individual, it's moving society in the right direction. So I'm happy to be a part of it in some small way. Yeah.
Thank you to our audience of over 350 people for attending this session, and thank you our hosts at Graph+AI for a fascinating discussion with an eminent panel. Have a wonderful day, everyone, and see you on the other side.